When we're looking for income, there's many different types of investments. Now, most people invest in common stocks. A really good example of this is a massive long-term dividend king, something like, for example, Johnson & Johnson, which has been increasing dividends for many decades. Another option is to go down the preferred stock route. Now, the preferred stock is in between a bond and a common stock. It has precedence. It will often still be required to be paid out, more like a bond, even if the company is struggling to pay out their common dividend. Now, preferred stocks, though, they have some characteristics of bonds. So they've got that par value, which almost acts like a magnet, drawing prices to it over time. So today we're going to look at one way of managing preferred stocks without getting into the nitty-gritty, without having to understand how they act and how they behave. Now, this method of managing preferred stocks to get some of that income without the stress, without the worry, it's simply to use a vehicle like the closed-end funds or CEFs. So in this video today, we're going to go over a couple of really good options in the CEF space, and I'm also going to look at some of the options in terms of CEFs or other funds as well. If you're looking at preferred shares, what to avoid, what to look for, and what to be careful and wary about. Let's get into it. Now, preferred stocks are a little bit perhaps of an acquired taste for many investors, but there are very accessible ways of getting access to preferred stocks. So these are three that I see often discussed: PFFA, PFF, or JPC. Now, as we look through here, we can begin to see this is showing all of them here since sort of mid-2018. We can see JPC, it's been down, it's up. All three of them were hit pretty bad during COVID. So we can see, for example, here, PFFA falling by quite a substantial amount here during this time, over a period of sort of 0.6 years, so we're not talking very long at all, crashing almost 60%. Now, my friends, that is a lot of volatility there. Now, even on the really positive side here, the PFF iShares, it was going down a reasonable amount. We're talking down about 20% or 25%. So we're still talking quite a lot of volatility here. So one of the big questions is, why bother? Why would you want to invest in these ETFs or these funds? And the answer is they can provide you with some reasonably good returns here. So we're looking here at the total return. So this is not just price changes, but also the impact of taking your distributions, taking your income, and then reinvesting back into the asset. Now we can see PFFA has been clear and away the winner here. Very high total return here, very low total return here. It has a lot of volatility. If we switch it down to a more recent periods, we can see once again PFFA is coming out ahead. JPC has a lot of volatility here, and PFF, sort of a stock standard type of index-based fund for preferred stocks, as opposed to PFFA, which I believe is actively managed. PFF has gone pretty much sideways over the last 3 years. Now, this is total return. It would have been spitting out income during this time, but it is not my favorite way of dealing with preferred stocks. Now, the difficulty with PFF being an index-based fund is it's sort of forced to buy and sell the preferred stocks as the index composition changes. Now, the big danger of that is that it might be buying or selling at what is not a very smart time. Now, preferred stocks are a very small niche part of the overall market. So if the fund is buying and selling at inopportune times, it's almost shooting itself in the foot and doing itself a big disservice. PFFA, on the other hand, can be a bit more tactical about when and where they buy, and so they have the opportunity to do a better job here. Now, you'll note as well that PFFA has substantially more volatility here than PFF. The other challenge that PFFA has is also managing their leverage. Now, that is going to amplify the income that they receive, but on the downside, it also means that it adds to this volatility here. So the volatility here, for example, switching from this period here down to this period here, PFFA lost 20% over a relatively short period of time. Now, that's primarily down to the exaggerated effects or the over-the-top effects of leverage playing a role in the downturn in the prices of those assets. Now, they keep leverage at what I consider to be a relatively safe level, but it is unavoidable. The leverage can be challenging to manage for investors. And even here, the fund managers, even if they use leverage prudently, it has the impact of adding volatility to these price swings.
Hey there! Let's take a quick break. If you want more than these few YouTube videos, I would like to invite you today to sign up for my new newsletter, the Dividend Dynamo. Now, in the newsletter, you are going to get some more deep dives. You'll get a heads up on the videos as they're released on YouTube. You'll get insider information not available elsewhere, as well as some portfolio changes that I'm making. All of this delivered straight to your inbox. If you're interested, use the link down below or use the QR code, and I'll see you soon.
Now, looking at the PFFA, if we take off the 5 years and we instead look at 3 years, we can see that there's been this very steady monthly increase here and then steady payment of these dividends. And it's been, for example, a reasonably steady period here in 2024. Now, if we switch to the overview tab here on Koifin, we get this picture here. We see that fairly extreme volatility. We can get a look here at the top holdings. We can get a look at some other similar ETFs. We can also see that it's got this nice juicy nearly 9% dividend yield, which is paid on a monthly basis, and that can be quite attractive. Now, switching through to the description, there's a lot of elements here which is perhaps not all that interesting. Now, for some reason, Koifin's not listing the amount of leverage here. I'll bring that up on another platform in just a minute. But we can get a sense here again of the dividend yield. It's paid out monthly. We've got the ex-date here, November the 20th, so that would suggest that the ex-date is going to be, again, the 20th of December. Management fees at about 0.8 for an actively managed fund. It's not the best, it's not the worst. And there's other expenses here as well, which will also be reflecting some of the costs of borrowing funds for that leverage. Now, I've just jumped on to the fund manager's website for PFFA and pulled this up. And we can see that they use what they call modest leverage of 20 to 30%. I think this is very much in the safe range, used to enhance portfolio beta and current income. Now, it gives us a sense here also of the composition of the portfolio, and we can sort of see again that these top holdings are only about 2%. And we can also get a sense here that some of the coupon rates of these preferred funds, the sort of the distribution rates, are reasonably high as a percentage. So if we're looking at this overall sort of 8.8% dividend return, it's probably going to be fairly well covered, I think, by their income. And this is not intended to be a deep dive. We can go into that at another time. Now, in a final look, how does it stack up to, say, just investing in the S&P 500? And the answer is, in terms of these total returns, it really does not stack up. And the reason is the S&P 500 has been ploughing ahead in recent years. And PFFA, yes, it does throw off a good amount of income, much more than S&P 500, but it's not going to give you a growth engine in your portfolio. It's going to give you an income engine. So if you do want to invest in PFFA or other preferred stocks, be aware of what you're investing in. Have a look at that leverage and have a look about whether or not this is going to fit your particular profile. Now, I'm very keen to hear from you. Is this part of your portfolio? If not, why not? Do you invest in preferred stock directly, or do you prefer to invest in preferred stock using a vehicle such as PFFA or PFF? Let me know in the comments down below, and I'll catch up with you soon.